So in this video, we're going to talk about American Airlines, and as you know, American Airlines is in the airline industry, and I believe it's a tough business because it's a very capital intensive industry. Profit margins not the greatest. However, it's a necessary evil as we do like to travel and we like to get to where we're going to get to. Nevertheless, they were recently upgraded by Raymond James, which is a Wall Street analyst, to an Outperform. And so before we get into the charts, let's actually get into the article. So Raymond James upgraded American Airlines to Outperform from Market Perform on an improved revenue outlook and a favorable risk to reward dynamics. We're going to discuss those risk to reward dynamics. Despite modest expectations from a new co-branded card deal, America's December update pointed to a stronger revenue environment. Enhanced engagement with corporate customers through likely at a price also supports the outlook. So they're talking about their business class clients. Now, Raymond James said American is well positioned ahead of U.S. airline earnings, alongside Alaska Airlines, which also had decent earnings a couple of weeks ago, Allegiant, and JetBlue. Delta remains the brokerage's top pick for medium to longer term investors, supported by its robust risk to reward profile. Now, the brokers noted that the U.S. dollar strength could boost the international demand, benefiting America's stronghold in South America. Now, I do anticipate the dollar topping at some point and then declining. So this might be a tailwind for the time being. All right, so we're going to get back to the charts. And again, it's worth putting a note here. Now, this yellow rectangle signifies monthly buy levels. And we came close to touching that upper portion of that level back during the pandemic. And then we were about $1.17 shy of hitting that upper portion of that level again in August before price reversed and started moving higher. Let's go down to the weekly chart, and we can see price continuing to grind higher. It's worth putting in trend line. Now, depending on how you draw your trend lines, you can put yours touching the wicks, or you can put yours at the body closes, and that's what I decided to do in this case here. Now, price is now at a level where it should be tougher to get through. Why? You had this rallying price, basing candles, and then the drop. And that drop took out the levels to the left at $13. And so I could say that you do have this intermediate weekly sell level, right? This is the weekly sell level outside of the range. And so the probability of this level holding is less than this level holding, which is outside the range. And this level is also closer to what I'm deeming as retail prices, meaning if and when price gets up to $22, prices are no longer cheap. It will be expensive. All right, let's drill down to the daily chart. Now, we do have a gap from early December. And so you could say that is a daily buy level. And if price pulls back, respects this trend line, well, that would be confluence and another gauge to say this level was significant. All right, so I'm going to examine this weekly inner level. You do have a nice M pattern. But you never got the pullback to go short. All right, so let's zoom back out. In conclusion, the chart suggesting price is going to move higher. However, there are some quicksand at roughly $8.50. But price is in an uptrend, making higher highs and higher lows. Also, you have a bullish crossover between the 13 and the 26 weekly moving average. And thus, look for a target, medium-term target, to come in at the $21 level, which is below the weekly sell level. You always want to get out below, in this case, sellers, or above, in this case, buyers. Thanks for watching. Subscribe. Please like the video.